Good morning, David Coombe here with the CBS AM Debrief for this Wednesday, the 9th of November. I've been on vacation, so hence haven't been seeing me much around. I've been up in Bangkok and Thailand, and for anyone that's been up to that part of the world recently would know that there's some pretty dynamic economic activity going on there, and one of the things that caught my eye was the extensive use of compressed natural gas. You see a lot of these cylinders stacked up behind the cabs of trucks, gas bottles on the back of even tuk-tuks, and so pretty widespread use there. So it's interesting to see that, given that I've been tending to follow that space fairly closely with varying degrees of success. Back down here on the ground now. What are we seeing here for today? Well, the Dow was up 92 points here to 12,160. Most of Europe was up. Now there is confirmation coming through that Berlusconi has resigned. He didn't get the support there he needed to stay, so he's losing grip on the power there. Will this result in Italy's problems disappearing? Hardly. So, even if some group of technocrats get in and are able to really knuckle down and try and solve the problem, that would be the best outcome. But at the moment, the likelihood of that happening would seem to be fairly remote, and for that reason, we'll probably see some disunity and fractured politics going on before anything meaningful happens. And of course, what that tends to mean is that nothing's really resolved. So the problem hasn't gone away. The 10-year bond yield there is up at 6.64%. So quite a big move up there for the bonds. So let's have a look at the actual markets here. The S&P 500 up a bit more there, the broader index 1.08, and the Nasdaq 1.13. In Europe, Stocks 50 up 1.20, the FTSE 1.03, and the DAX up 0.55. In our region, we had the Nikkei down 1.27 yesterday. Hong Kong was even, and Shanghai down 0.31. Let's have a look at what the futures are suggesting for our region. Okay, so we've got a pretty solid lift here, indicated this morning, up 63 points to 4,345. And let's have a look at the commodities. Crude's pushing higher again here with West Texas at 96.89. It's up $1.37, and that's we were talking about this yesterday across the desk. The Iranian desire to build an atomic weapon seems to be gaining further evidence that they're moving further down the road with that, and of course Israel isn't too happy about that, so they're saber rattling there, which of course could see some sort of a conflict occur there. Iran being right in the middle of Middle East oil there is obviously causing concerns there, and Israel on the border of the Red Sea, in terms of the big shipping route, is the other concern. Okay, moving through to have a look at some of the rest of our commodities here. Just looking at some of the bigger numbers here. Cocoa down 2.21, canola down 0.4, coffee down 1.46, corn up 1.11, cotton up 0.89, orange juice down 0.12, wheat up 2.86, sugar up 2.33, soy bean down 0.27, lumber down 1.16, oats down 0.15, rough rice 1.21, and wool up just 0.15. Copper at 0.4, up 1.4 cents to $3.54.95, and gold failing to punch through 1800 at 1785.40. That was down $5.70, and silver at 34.96 is up 0.132, and that about wraps up the commodities. Let's have a look at the currency pairs. Euro buying a little bit more here, 1.38 for 1, probably on the back of that Berlusconi resignation. The pound buying 1.6103 US dollars, the US dollar buying 77.6838 yen, and the Aussie buying 104 even, US dollar buying 1.0093 Canadian, and the US dollar buying 0.8948 pardon me, Swiss francs. Okay, move on here, have a look at the economic calendar. Not much significant data out today, although there is a slew of Chinese data, including 2 Tier 1 pieces of data, which is their CPI numbers for October. Now, we are expecting a smaller number there, 5.4 versus the forecast versus 6.1 the previous, and 5.4 the 5.8 and 6.5 the previous. So it does appear that one of the benefits of a centrally planned economy is that you can jump in and do things that might not otherwise be palatable to voters. And so it does appear that the Chinese administration there are successfully reining in the inflation there, and this talk of a hard landing seems to be less and less likely at this stage. I've also got some home loans numbers out to give us a little bit of an idea, locally rather, give us a little bit of an idea of how the housing sector is progressing. We've got consumer confidence numbers. We did have those NAB numbers the other day, and they came out a little bit better than expected. They had that 0.2 figure rather than -1. So I would have expected that we would see a slightly more positive number there. Then we've got a little bit of Japanese data out. Then UK visible trade, pretty much winding it up for Wednesday. So it really shouldn't be anything too much to create a drama here. Leading in tomorrow, we've got unemployment numbers out here locally, and then going through the end of the week, University of Michigan confidence numbers from the US late on Friday night. Okay, let's take a look at the Falcon Trader and have a look at a couple of things here. One is St Barbara. This is the gold, local gold play. Well, I know I've looked at this many times before in the morning debriefs, but looking at it again now. We've got this double top here. If we can take that out, we've also got a bit of perhaps a trend line break here. Right there. I've got a couple of others here. Obviously, we've got this gold back on everyone's mind again. Silver Lakes. Talked about this down around this level here. I think it was 240. So that's put on a handy dollar since then. Pretty nice to see. Unfortunately, I wasn't on it the whole way, and it seems that only the brave were holding things all the way through these last couple of months here. Okay, Kingsgate making another takeover play. Will this one be successful? There seems to be a bit of a discount to it, or reluctance for it to trade any further higher here at the moment. But we've got to make this a bit of a triple bottom here, and I would have thought it's not too unrealistic for that to trade back up to $8 in fairly short order once the details of this takeover play are known. Okay, and I wanted to follow up on one that I talked about prior to going on leave, which was Harvey Norman. Now that has gone ex-dividend. It paid around a 5% fully franked dividend from memory, and it promptly got sold off, particularly after those couple of nasty sessions we had last week. It does seem to be clawing back higher here. Technically, it looks quite reasonably well supported, coming off this low around $2. Otherwise, we're going to go back to 180, which was the August 9 low that we saw there. But I'm reasonably positive of the retail space. At the moment, we're going into Christmas. We've got interest rates coming off. We seem to have people perhaps a little bit tired of keeping their wallets shut, and we start to perhaps see some a little bit more spending coming through. So don't mind that as a good defensive one. The other one in that space that I'm liking at the moment, although it is starting to move away from a sort of a better buy zone, I would have thought, is Woolworths. Got a dividend coming up, I think it's next month, and that's starting to look pretty like it's really coming off a low there. There also has been some talk about them selling off their property assets, which I understand are worth between $8 and $9 billion, and that would certainly seem to crystallise a lot of value there for the organisation, sitting on a lot of prime land all over the country, and spinning it off as a separate entity could be a pretty smart thing to do. Okay, I think that's probably enough for today. So looks like we're in for a reasonably good one. So sit back and enjoy the ride. If you vlog anything, good on you. And until next time, that's it from me. Bye for now.